Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. The AI rally rolls on. Asian equities kick off the second half of the year after their strongest quarter in 17 years, led by chip makers and AI hardware stocks. Yen under pressure. Traders eye Japan's next red line as the currency hits a 4-decade low. And oversupply ahead. Oil posts its biggest quarterly drop since the pandemic as traders bet a glut will return with Hormuz traffic normalizing. It's just gone 8 a.m. across the Emirates. I'm Abir Abamad in Dubai. The start of the third quarter today. So let's take a quick look at where markets are this morning, finishing their strongest quarter in a while yesterday. Now, when we look at U.S. futures, they're tilting lower this morning, 0.2% lower. We're keeping a close eye on the S&P 500, obviously, and the Max 7 and the AI CapEx game there, and earnings season is about to start again, so that's something to keep an eye on. But something we're also keeping a close eye on this morning is Bitcoin. It is at a 21-month low. It is below $60,000. We're keeping a close eye on that because of the fears of rate hikes by the Federal Reserve tilting Bitcoin lower. It has fallen below the 200-week moving average, so that's a quite telling indicator. Not a lot of people happy about that move. It wasn't long ago when Bitcoin was over $100,000. Asian equities are tilting higher this morning, barely higher, 1/10. Now they are erasing losses that we saw earlier in the session. The Kospi was falling earlier, but again, Asian equities had their best quarter in about 17 years, led by, as I mentioned at the top of the show, chip makers and the AI game. And then Brent crude, we're keeping a close eye on it as we have been over the past few months or so. It is tilting higher, $73 a barrel for Brent crude prices. The negotiations or the talks between the U.S. and Iran in Doha went positively, according to what we have been hearing from the American side. Yesterday, President Trump saying no military intervention for now. He's deciding to go down the diplomatic route. But we're also keeping an eye on some big banks, including Goldman Sachs, saying we might see an oversupply in the oil market later this year. So a return to fundamentals, perhaps. And then key economic data keeps coming out of the U.S. JOLTS data. Yesterday, we keep an eye out on payroll data on Thursday, but the yield on the 10-year notes not moving very much today. Again, we await what the Fed decides to do by the end of this year and whether the data coming out on Thursday will solidify that rate hike or the prospects on that rate hike. Now, moving on to currencies, the yen's relentless slide is putting fresh pressure on Japanese policymakers, with the currency hovering near a 4-decade low against the dollar. Traders are now watching closely for any sign of intervention as the yen nears 163 versus the dollar. For more, we're now joined by Bloomberg Asia Markets Executive Editor Paul Dobson. Paul, just how likely is it that Japanese authorities will intervene if the yen falls further, and how effective will that be?
Great questions. Abir, thank you very much for having me. We obviously have seen the Japanese authorities already this year intervening to stem the losses in the yen, but it didn't prove all that effective the first time around. We're weakening again, as you've been explaining. We're at that 163 level. The market is nervous and on tenterhooks about the possibility that there will be further intervention from the Japanese government at some point. And I think that that's part of the reason why the move is such a snail's pace for the yen at the moment, just really drifting weaker day by day. I think that the levels that the market is identifying as the next ones to watch out for are not very far from here. 163, 164, will they, won't they? And it's a distinct possibility that they would wait until after we get the non-farm payrolls data from the US. That's coming a day earlier than normal on Thursday. If that were a number that were to push the dollar higher again and therefore weaken the yen, that might be a moment where they would want to take some action, particularly actually on the Friday when it's a US holiday and liquidity is lower, so they could get more bang for their buck. But it's been uncertain. They haven't given us a very strong signal like they did the last time around as yet. So pay attention to the rhetoric that we're hearing from the policymakers to see whether they give a really clear indication that they've had enough of the weakness and want to do something about it. Longer term, though, the people's views are that it's going to take more than that to turn it around for good.
Yeah. And Paul, just looking at broader markets, we're kicking off a new quarter today. What is the outlook for the markets when it comes to whether Asia or the U.S. from here?
Yeah, so I think for Asian equity markets, there's still a good deal of momentum coming from a very strong first half of the year and a very strong second quarter as well, a record quarter for Japan, the highest in more than a decade for South Korea. And South Korea really is the barometer I think you want to watch, maybe not even just for Asian markets, but maybe for global markets, given one, the gains that it's had, two, the fact that it represents that AI trade, and three, the volatility that it's been whipping up of late. Lots of calls on the street for much higher markets in South Korea over time. There may be some consolidation phases along the way. JP Morgan, for example, has it all the way up at 12,500, I think, a year from now. So those are the sorts of things to watch out for in terms of momentum. The other thing is the Federal Reserve, whether they move closer to hiking interest rates, one thing that could kind of upset the market potentially. It's lifting the dollar, for example, today on those bets. And so that rhetoric that we get from Kevin Warsh in coming days and coming weeks will be important to pay attention to as well.
All right. Bloomberg's Paul Dobson keeping an eye on all those market moves for us. And speaking of those, U.S. equities saw their best quarter in 6 years, driven by a semiconductor-led AI surge that powered the market back from a bruising first quarter. Investors are watching Fed Chairman Kevin Warsh's speech in Europe later today and tomorrow's U.S. June payrolls report for clues on the path for interest rates. Joining us now to talk about the market moves is Rahul Chadh, Shikhara Investment Management CIO and founder. Rahul, good to have you on. You heard me speak to our colleague Paul earlier about the moves, the yen, everything that's been happening in markets. With the moves that we're seeing, the easing of the geopolitical tensions, how do you really position?
Yeah, so Ellie, what's happened in recent week is the incoming Fed governor wanted to establish credibility, and which is why you had a lot of statements which were interpreted as hawkish by the market. And you look at President Trump, normally he'll make a lot of noise when the Fed governor talks about rate hikes. Here it was quite absolutely same with Scott Bessent. So I think this is just to calm the bond markets. What these guys are saying is look at the real inflation, which is through the true inflation, and that's somewhat trending down. And what you talked about, oil basically, that we started the year with a surplus market. Oil's been relatively well behaved. It's not gone to 150 because people have drawn down on inventories. And if the Middle East kind of an skirmish gets sorted out quickly, I think we go back to a situation of excess supply on the oil, inflation would automatically trend down. So right now, market is faring 3. I'm not sure whether it's going to be beyond 1 or not. So I think that cools off a lot of currencies, something which we were seeing in terms of JPY depreciating, and overall the risk appetite, etc.
But Rahul, we've been talking about the market performance since the start of the year and the staggering numbers there. I mean, the best quarter in 6 years, the best quarter in 16 years, or 17 years for Asian equities. And even at the height of the war, the markets were outperforming.
Yeah.
So do you see this performance in AI generally or in tech specifically as sustainable going forward?
So I think this should take a breather, and this performance has been led by particularly semis, the kind of a memory names like Micron, and in Asia it's basically Samsung and Hynix. These names will take a breather because though optically they look cheap on earnings, but these earnings have gone up 10x, and once the supply comes in 2-3 years from now, obviously the earnings are going to be readjusted. So what we kind of are anticipating is next 6 months, tech takes a breather. People will look at what comes out of Mag 7 in terms of their commitment to the capex. Yeah. We've had Microsoft, particularly Bill Gates, talking about that the AI data center capex has gone up from 30 billion to for a gigawatt to about 100 billion for a gigawatt. Mag 7 has underperformed. So if these guys come back saying that, look, the capex doesn't justify ROI, and it's better to move the tokens to the Chinese LLMs, etc., I think that can be a cooling event or a breather for the AI trade. At the same time, there is another part of the market which has completely underperformed. Yeah. And I think that's where the opportunity is.
So when it comes to capex, because you mentioned those, where do you think Mag 7 goes from here? Increasing, maintaining capex, or cutting it?
I think one would watch Microsoft very closely. Those are the guys, you look at statements which are coming from Satya Nadella here, what he's been tweeting about, that people should be on private clouds, etc., not give all the data to Anthropic. That's a competition for them. You look at what Bill Gates has been talking about. I think one's got to watch Microsoft particularly for CapEx. But the base case from a market is that CapEx is going to be maintained or move up. So anything negative to that, I think is going to be obviously impacting these stocks, which have done well.
And a lot of these companies in the Max 7, also SpaceX, not part of the cohort yet, a lot of them have tapped bond markets. What does that tell you about their strategies?
So I think these guys have started tapping the bond markets. The bullish argument is, look, they're unlevered balance sheet, but there is so much amount of paper bond markets can take. So if you've got, let's say, 300-400 billion of paper coming from these set of companies, I think appetite would get impacted over there. So and these capex numbers are moving up. They've spent close to almost 1 trillion by the end of this year. Next year numbers, if we look at those, are about 1.3 trillion. So you look at the token spends, they've plateaued since May onwards. So I think this is going to be an interesting quarter to hear if any of these companies are looking to fine-tune their capex.
And Rahul, I feel like this question has been overstated over the past few months or so, but historically, circumstances seem to just suggest that we're heading towards a bubble bursting. Do you agree with that notion?
I don't think so. You see, there are parts of markets where you've got excesses.
Okay.
Because, look, AI is for real. There are going to be some pullbacks here, 20-30%, etc. But you're not sitting on the P's we had in the previous cycle, whether it was 2000 or 2007, etc. So I would not call it significant drawdowns. I would not really say that they're going to be 60-70% drawdowns, but 20-30% pullbacks and a time correction very much on the cards.
All right, so no contrarian view from you yet, which is good. Thank you so much for your time today, Rahul. That was Rahul Chadh, a CIO and founder at Shikhara Investment Management. Now, coming up next, the U.S. says talks in Qatar to cement a longer-term peace deal with Iran are off to a positive start. Details from those negotiations next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. The U.S. says negotiators Jared Kushner and Steve Witkoff had positive discussions with regional leaders in Doha on a deal with Iran. Oil is inching higher today as the two countries seek to ease tensions in the wake of recent clashes over the Strait of Hormuz. Joining me now is Stuart Livingstone-Wallace, Bloomberg's executive editor for the Middle East, North Africa, and Russia. For your usual segment today, Stuart, where do the latest negotiations stand between the two?
Yes, we got precious few details about what was actually discussed, and it was going via the mediators, which is not wildly unusual. I mean, that has been the standard fare. What I suppose was interesting is they're saying the talks were very positive, and that's kind of interesting because I think it signals the level to which the US is prepared to put up with, some quite vociferous remarks from the Iranians, some pretty extreme action tail end of last week and over the weekend, and at the same time, in any way characterize the talks as positive. I suppose the fact that they are talking is positive, but, when you've had this sort of tit-for-tat exchange over Hormuz and some very strong comments from Galibaf that you continue to say it's positive, I think shows kind of, I suppose, the attitude that the US is going into these negotiations with.
And then for tangible sort of what is happening on the ground, the Strait of Hormuz, we've heard from the United States that movement has carried out or has carried on through the Strait with more volumes. Is that what we're seeing? Is there movement in the Strait of Hormuz now? There
is. I mean, what's kind of interesting is that it's a little bit patchy. It's still quite hard to tell exactly day to day what's going on, and the estimates vary. A lot of that's, signals being switched off and they're coming back on again when they're, many, many miles away. So it would seem that there is traffic going through. Certainly the oil market is working on the assumption that lots of traffic is going through. As you know, there's lots of talk now about returning to a global supply glut. I would say it's perhaps a little premature to bake that in as a certainty, given what we've seen in the last couple of weeks about, sporadic fire into there. And then obviously the shipping industry is going to be very reluctant to think it's business as normal when you've still got drones flying across that strait.
Yeah, we've been kind of touting the stories about Morgan Stanley bringing down their average oil price estimates, and Goldman this morning saying that we might see oversupply by the end of this year. So something to keep an eye on. Stuart, thank you as always. Stuart Livingstone Wallace, Bloomberg's executive editor for the Middle East, North Africa and Russia. Now, before we head into the break, let's take a look at the year-to-date performance of equity gauges in the Middle East. We're taking a look at the ones in Israel, Saudi Arabia, Dubai and Egypt. All but Dubai is in the green over the past 6 months. But something to note about Dubai, it is down 1.5% over the past 6 months. But the past quarter has seen a near 10% gain for the main index. Now, this is obviously all the war story and the impact on businesses. But we're seeing quite a rebound, especially in Egypt, 20.7% higher for Egyptian stocks. Israel, 10.1% higher. And the Tadawul in Saudi Arabia, 2.4% higher over the first half of the year. A story to keep an eye on for the second half of the year as those tensions from the war continue to ease and oil continues its movement through the Strait of Hormuz. Now, coming up, restrictions are lifted. The U.S. government has removed foreign access curbs on Anthropic's Fable 5 AI model. We'll discuss the details on that story next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. The U.S. has lifted foreign access restrictions on Anthropic's most powerful AI model. The move clears Fable 5 for wider global use after the startup resolved the Trump administration's safety concerns. Anthropic says it will begin restoring access very soon. For more on the story, let's bring in Bloomberg's Minmin Lo. Minmin, good to have you on. The background on this decision to lift the restrictions, can you talk to us a little bit more about that?
Hey, Abir. Yes, indeed. The Trump administration had a few weeks ago called on Anthropic to request for U.S. approval before allowing foreign access to a couple of its most powerful AI models, and that includes the Fable 5 as well as the Mythos 5. And we reported a few days ago that Anthropic had made some adjustments to its AI model to really comply or address some of the national security concerns. So the U.S. government then later had lifted some of the selected restrictions on the Mythos 5 model to allow vetted companies, especially companies like cyber defenders as well as critical infrastructure provider, to access the Mythos 5. So that's the most powerful model. And we are now hearing that the U.S. government is lifting foreign access restriction for Fable 5, which is a less powerful version of the Mythos, and it's meant for more wide public usage. And so this is certainly a big win for Anthropic. It seems like they have steered their relationship with the Trump administration to more stable tracks now, and possibly going to be good for its valuation as well ahead of this highly anticipated IPO.
And Minmin, Anthropic also just launched this new software for research. What do we know about it?
Yes, it's called Cloud Science, and it's targeted at scientists, helping to automate some of their research, some of the multi-step tasks, especially things like having to query multiple sources of information for answers, for example. So it combines a number of tools that are commonly used by scientists and makes access available to some 60 scientific databases. And this app or this tool will be able to help with AI drug discovery as well. So as you can imagine, that could be quite a game-changing technology for the biotech and pharma sector. And we did see in the U.S. session some of these drugs discovery companies getting hit in markets so far. But Anthropic seems to be reassuring markets here, saying that they will try to target areas that is traditionally not as attractive to the established biotech players. But certainly we are seeing some market reaction on the back of that.
All right. Bloomberg's Minmin Low, the details on Anthropic and the restrictions there. Thank you. Now on to some of the stories that we're following this morning. President Trump has reported yearly earnings of at least $1.4 billion from crypto and memo coin-related businesses. That far exceeds the income from his hotels and golf resorts, renewing concerns he's profiting from the presidency. Trump also earned at least $26 million from new real estate ventures overseas, growing his fortune as his family embraces foreign deal-making. The U.S. Supreme Court has rejected President Trump's plan to restrict birthright citizenship, deeming it unconstitutional. The court says Trump's executive order cannot be squared with the Constitution's 14th Amendment, which guarantees citizenship to almost everyone born on U.S. soil. Trump suggested on social media that the issue could now be addressed in Congress through legislation. Susquehanna has won a court order freezing brokerage accounts it says are tied to a $100 million insider trading scheme. It's also able to subpoena brokers to identify account holders. The firm alleges it lost more than $70 million to traders it believes were tipped off ahead of China's May crackdown on cross-border securities firms. And thousands of people have joined anti-migrant protests in South Africa, watched over by a massive police contingent that was deployed to prevent violence and intimidation. The demonstrations were called by an organization known as March and March to demand that all undocumented foreigners leave the country. The rallies were mostly peaceful and bar a few isolated incidents. Billionaire Aliko Dangote has started discussions with government officials in Tanzania to invest in several major infrastructure projects in the country. The planned investment include a port development project, a special trade zone, and a coal-fired power plant. The Dangote Group plans to spend about $40 billion over the next 5 years to expand its businesses in Africa. Now, a quick look into where markets are before we head into the break. Equity futures in the United States still lower, 0.3% lower, and oil prices are gaining this morning. And coming up, gold under pressure from inflation risks as traders weigh possible rate hikes. We'll discuss that next. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. The AI rally rolls on. Asian equities kick off the second half of the year after their strongest quarter in 17 years, led by chip makers and AI hardware stocks. In yen under pressure, traders eye Japan's next trendline as the currency hits a 4-decade low. And oversupply ahead. Oil posts its biggest quarterly drop since the pandemic as traders bet a glut will return with Hormuz traffic normalizing. It's just gone 8:30 across the Emirates. I'm Abir Abu Ahmed in Dubai. Let's take a quick look at where markets are at 5:30 this morning. U.S. futures are now tilting 0.3% lower. We're seeing Asian equities a little bit higher, 0.2 higher, so doing the exact opposite of what U.S. futures are doing. Now, Asian equities had edged lower earlier in the session. This is as investors turned a little bit more cautious after the rally in chip makers and other tech stocks, namely Samsung and SK Hynix in South Korea, that helped really propel them to the best quarter in 17 years. We also saw a similar move in the S&P 500, the best quarter in about 6 years. And again, all led by this AI rally in the trade there. When it comes to Brent crude prices, $73 a barrel, 0.4 higher. We continue to monitor the negotiations between Iran and the U.S., but also some major banks, including Morgan Stanley and Goldman Sachs, saying we might see an oversupply in the market later on this year. Morgan Stanley yesterday, we noted this story, brought down their average price estimate for Brent prices this year, $15 lower for the third quarter, $5 lower for the fourth quarter, about $75 a barrel for the average price. And then unchanged, completely unchanged for the yield on the 10-year notes in the United States. We await that payroll data coming out tomorrow ahead of the 4th of July holiday on Friday in the United States. Now, moving on to the oil story, but a regional story. Bloomberg understands that the UAE's biggest oil company is proposing a new pricing methodology for the sale of crude supplies to term customers. ADNOC instead is opting for an approach that's more aligned with wider regional trading norms. For more on the story, let's bring in Anthony DePaula, our Middle East energy markets reporter. Anthony, good to have you on.
Good morning, Veer.
What can you tell us about this plan?
Yeah, good morning. Well, this is a little bit of a technical situation about how Abu Dhabi prices its crude on a monthly basis for the customers that are buying it under long-term contracts. These are refiners, chemical companies, mainly in Asia, which is ADNOC's biggest market. And what ADNOC is doing is switching the pricing methodology from for its offshore crudes. It's got 3 grades of crude oil that are produced offshore, and those are now currently priced as a premium or discount to an exchange-derived price for the Murban crude, which is Abu Dhabi's biggest onshore grade. That is traded on an exchange in Abu Dhabi, and so the market sets that price, and the other crudes, the offshore crudes, are set at plus or minus dollars or cents to that. Instead, they're switching it to the Dubai benchmark, which is an assessment of a basket of oils, typical of format used in the market, whereas pricing agencies will assess the price of what the trading is, and those offshore crudes will be priced to that. That's because a lot of the upheaval in the market has really played havoc on those benchmarks in the Gulf, as oil hasn't been able to come out of the Gulf, through the Strait of Hormuz. That's made it really difficult for traders to price and assess those oil costs. So they're moving to that to reflect the market a little bit more, and also that Murban link had been also very strained by the dislocations in the market. So this should give some pricing clarity on those barrels now.
Just returning to fundamentals, Anthony, I was speaking a little bit earlier on about what Morgan Stanley and Goldman had been saying about oil prices towards the end of the year. That oversupply or the glut returning to the market, is that something that is seeable? Is that realistic?
Yeah, I mean, that's something that the market is really watching for now, and that's why we've seen that sharp sell-off in prices. Just to remind you, we were going into this year with forecasts of a big glut, meaning too much oil on the market. That was weighing down prices. The war caused prices to spike, caused all these dislocations. But what we did see during the war was also a big fall-off in demand as well. So China really decreased its imports because they used oil out of stockpiles. They cut some refining. So that has hit demand. Some chemical producers in India stopped buying because they couldn't get the supplies. So we've seen a hit to demand, and now we're seeing this wave of supply coming back, particularly as tankers that are loaded and were waiting are coming back onto market, and then bringing it back here to Abu Dhabi. Even Abu Dhabi, just having left OPEC, wants to increase its production, has some higher capacity targets, and so they're not going to be constrained by what was a quota that was much lower than what they're capable of producing. So we do see the prospect of much oil coming back to the market.
Okay, and then a scoop that you're a part of, congratulations. Shell is considering selling its fuel stations in South Africa. What do we know about that deal?
Yeah, so this is one we've been watching for a while, over a year now, in fact, as Shell put those retail stations on sale. And so it looks like ADNOC is the front runner for that with its ADNOC distribution unit. This asset is probably about $1 billion valuation with hundreds of stations across South Africa. That's a really valuable market for companies like the Gulf producers to get into, for their trading companies, for their retail units, because they want to make those inroads into Africa, where the Gulf producers can sell their oil, can sell their products, having something that the traders will call a short, meaning demand, by having a retail unit or some storage there. Those are really what these oil companies look for in terms of having an outlet for their oil and having a ready customer for their oil. So it's a strategic move for the company to supply, as well as getting some additional retail presence in South Africa.
All right, Anthony, on top of all the energy stories in the region and beyond. Thank you. As Anthony DePaula, our Middle East energy markets reporter. Now, a story that we've been monitoring over the past couple of days, we're seeing the yen strengthen versus the US dollar after comments from Japan's top FX official Atsushi Nomura to Bloomberg. He says the most recent intervention 2 months ago was successful. He also emphasized that the frequency of his communications with US counterparts, saying it's much more than people probably imagine. We've seen the yen slide to a fresh 40-year low since 1986 against the dollar on the back of these comments. Now, the price of gold has slipped for a third day as traders track U.S.-Iran peace talks and weigh signals the Federal Reserve may move to tighten policy. The yellow metal sank 14% in the second quarter, capping the worst performance since 2013. Joining us now to talk more about this is George Cheveley, Natural Resources Portfolio Manager over at 91. George, good to have you on. Gold right now, below, not above, $4,000 an ounce. Should we continue to see this downside movement in it?
I think in the short term, we've seen gold really it's had a tough quarter. We've seen a technical breakdown below the 200-day moving average. And people are obviously concerned about the hawkish nature of Warsh's opening speech, and are concerned that, with inflation still threatening in the States, we're going to see potentially more downside. I think probably in the short term, the technicals are weighing on gold. But I think if you look towards the end of the year, we still see a huge amount of interest, particularly from central banks, in buying gold. In fact, the latest central bank survey that came out recently showed a higher number than ever, 45%, saying they intended to increase holdings over the next 12 months. Also, interestingly, we've seen in the ETF market, gold holdings were about 101 million ounces 2 months ago. In this sell-off, they've come back, but only to around 96, 97 million ounces. So there hasn't been a real run of selling in that market either. So, it's we had a very strong start of the year. Gold has come back a bit, and there's probably some work to do here. But I think we can see, over the next few months, we're going to see gold start to recover. The fact is, I think it's going to be very tough for the Fed to hike rates, even if they want to, because obviously, the cost to them is pretty high.
Yeah, and George, you mentioned central banks buying aggressively. Do you think that puts a higher floor to the price compared to previous cycles?
Yeah, I think we've seen that floor move up each time. We're clearly establishing a new floor here, I think, and that might take a little while. But generally, when we've seen this happen, gold sets back, but we find a new floor, and then from there we push on. And I don't think we're done in this cycle. I mean, that's always the worry when you've seen this sort of sell-off, that that was the peak and the cycle's over. But I think when you look at the macro backdrop and the fiscal deficits around the world, and also the desire to buy gold in Asia, we've seen obviously China, other countries wanting to add to their gold holdings. I think that will maintain this buying pressure on gold over the long term.
Yeah, and I want to return to China, but before that, I want to talk about another metal, copper, where we're seeing the structural demand for it being quite strong. But how does the tariff story play into that demand?
Yeah, I mean, copper's all focused on the potential for tariffs to be introduced in America. We're waiting for an announcement. It was expected maybe yesterday. A lot of speculation, as there was a year ago, when it didn't happen, and therefore people are fairly wary. Still definitely some expectation there will be a tariff put on. Some talk around 10, 15%. Obviously, that will come in next year. They've said it will be from January if it happens. I think to some extent it's obviously dragged a lot of copper to the US. We've seen stocks mainly rise in the US as people position for this. I think the fact we have to focus on, though, is overall inventories on exchange have risen around 800,000 tons over the past 12 months. So, whilst people say copper is tight, demand is strong, we have seen a build of inventory on exchanges over the last 12 months. And in fact, 400,000 of that has appeared this year. So we have to be careful. People are trading a very short-term tariff story. We just need to be mindful that copper supply, while it's been disrupted, is recovering.
And George, just on China and its processing power over rare earths, how much power does that give it in today's geopolitical environment?
Short term, it gives it a lot of power, and there's clearly been a lot of concern around critical mineral sourcing. There was a meeting pre the G7 2 weeks ago in Paris to discuss this. And whilst in the short term, I think we have to step back, though. Again, this is a processing problem. It's not an availability of ore. And if the West can solve this problem, and they're working hard to do that and build the facilities, this can be solved relatively quickly, but not for a year or two. And obviously, in that period, people are concerned about supply of some of these critical rare earths. But I think to some extent, this isn't a problem that's a long-term problem. This is a short-term problem while the West, really works out how to process these materials.
All right, George, we're going to have to leave it there. George Cheveley, Natural Resources Portfolio Manager at 91. Now, South 32 shares rally after ALCOA agrees to buy the company's alumina, and bauxite business in a deal worth up to $5.6 billion. The acquisition will expand ALCOA's operations across the aluminum supply chain with assets in Australia, Brazil, and South Africa. ALCOA says the deal will strengthen its position as demand for aluminum continues to grow. And coming up, Ethiopia's sole Eurobond jumped to the highest in almost 6 months after the government said it had reached a restructuring deal with creditors. More details on that story next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. Ethiopia's sole Eurobond jumped to the highest in almost 6 months after the government said it had reached a restructuring deal with creditors. The government and an ad hoc committee have agreed in principle to the financial terms of a restructuring under which creditors will receive a new $880 million issue maturing in 2029. The move is expected to allow the government to avert a prolonged legal battle. Our chief Africa correspondent, Jennifer Zapasaja, joins us now from Johannesburg to discuss more. Jen, good to have you on. Can you talk to us more about the details of what exactly has been agreed upon?
Yeah, of course, Abir. So as you were just pointing out there, this had been a focus for investors for quite some time. But yes, you were mentioning the group representing, it's just about 45% of bondholders there in Ethiopia have agreed to this deal in principle. So we should note that it is in principle, which still, of course, sent the bond strengthening a bit on Tuesday. What you were just mentioning there, this includes this $1 billion Eurobond. In exchange for that, will now get an $880 million bond maturing in 2029. Not just that, there is also a warrant that is now going to give investors the right to subscribe to a future bond issue. That is something new that investors were noting with these negotiations that were going on. What we know is that the deal does have IMF and official creditor backing, and importantly avoids a lengthy legal battle. That was really the concern for investors as this had been dragged out for quite some time. We should remember that this has been an issue for Ethiopia dating all the way back to December of 2023 when the government actually did default and they skipped that coupon payment, and really has sort of brought to light this G20 common framework, which we know not just Ethiopia is a part of, but also Chad, Zambia, and Ghana. And so a lot of the discussion right now that is happening in the markets is how effective effective is this G20 common framework? But really, when it comes to Ethiopia, the positive sign right now is that at least this group of 45% of bondholders have been able to reach a deal in principle to move forward.
And so this deal in principle, what could it potentially mean for the wider economy in Ethiopia?
Well, you were just mentioning we've already seen that bond strengthening since this news came out earlier in the week. But it could be a major step towards Ethiopia being able to actually restructure some of their debt. And for investors who have been waiting for this to happen, have been watching stalled talks drag on, it could really revive some of the concern that had been in the markets. We've actually been speaking to investors we have a Jefferies strategist who we spoke to, Tato Mosadi, who actually was telling us that he sees more scope for the bond to extend some of the gains already, and says that the agreement confirms a high recovery outcome with limited debt relief required and strong front-loaded cash flows. So potentially that is a good sign. It also potentially, Abir, revives some confidence in Ethiopia more broadly. Ethiopia potentially could regain access to the international capital markets. Although the government still has its work cut out for it, we know that Prime Minister Abiy Ahmed was recently re-elected, and still there's quite a lot of reforms that the IMF has asked for as part of the IMF-backed program. So investors still want to see progress on some of those reforms, and we should just note inflation is still north of 13%, and there's high living costs for Ethiopians. So still quite a bit for the economic recovery part, but it's looking like at least positive at this point.
All right, Jen, keeping an eye on that story for us. Jennifer Zapisadra, our chief Africa correspondent in Johannesburg. Now, coming up, prominent hedge funds and banks snap up office spaces in Dubai's financial center. We'll discuss what is driving demand despite the uncertainty in the region. That is coming up next. This is Bloomberg. Dubai's financial center is opening new towers with commercial space, paving the way for tenants, including Deutsche Bank and Moody's. This is at a time when the region is grappling with the effects of the Iran war. The stickiness of business demand is turning office properties into a steady source of cash for the Dubai government. For more on the story, we're bringing in Zainab Fattah, our Middle East finance reporter. Good to have you on. I can't believe it took us this long to have you on. I know. Zainab, what is driving this demand?
It's pure and simple, very low supply of prime real estate that's coveted by a lot of the banks and the hedge funds and the firms that relocated to Dubai or are expanding in the city. And at the same time, most of those firms have expanded over the past few years, and they were committed to contracts. Sometimes these contracts are long-term with 7 years or even more. So a lot of the office space that's being built in the city, most of it is contracted already before construction. We mentioned 3 office buildings that were being built. Literally, it took from design to completion about 24 months, which is record time. And before even the handover, all of this space was already rented out. So it shows you how tight is the market.
And you can see, driving into the IFC, just how much construction there is, and the roads as well. How are landlords handling this whole demand push?
Demand in the free zones, which most companies are in free zones, and demand in free zones have been strong. And Dubai really underbuilt for many, many years, for decades, because since the financial crisis, when most developers were caught with a lot of supply that nobody wanted, which was called strata, basically a single building owned each floor by a different landlord. A lot of companies didn't want that space. You had an aversion to building new office space. Now that the picture is changing. We see a lot of supply that is probably going to come onto the market in the next few years. Still, rents have gone up 17% in the first quarter from the first quarter of last year, and vacancy rate within prime real estate, that's the one sought after by a lot of the companies, is 0.7%. So really a lot of space is already rented, and that gives us an idea of how much strength the landlords have. So they're not reducing their rents. All they're doing is basically giving in a free month here or there to fit out.
Wow. So a story that only Zainab can keep an eye on. Thank you for your time this morning. It was Zainab Fattah with Bloomberg. Now, Bloomberg has learned that Emirates NBD is in talks to buy HSBC's Turkey operations, though we're told the talks are at an early stage and a deal may not be reached. Emirates NBD has been aiming to further expand its Turkish operations, particularly after an administrative reshuffle in Turkey that led to the appointment of a new CEO in 2024. Now, that is it for Horizons Middle East and Africa. I'm Abir Abu Omar in Dubai. Stick around with us for Daybreak Europe. This is Bloomberg.